Soluna Holdings Inc. is a high-conviction, high-stress stock. It monetizes stranded renewable power with co-located compute. Add Bitcoin mining flexibility and AI HPC ambitions, and the story is compelling. The real question is per share. Will value compound or will dilution fund the upside away? After the US market closed on December 2nd, 2025, SLNH was around 1.6e, down about 3. Stock analysis showed about 110 million market cap, about 85 million enterprise value, and a 52-week range of about 0.40 to 5.10. The headline is dilution, about 68 million shares outstanding and about 300 year-over-year growth, implying the base roughly tripled. The premise is simple. Grid cannot always absorb renewable output, so power gets curtailed. Soluna positions infrastructure near generation and converts waste electricity into computation. That requires a real-world data center, meaning power equipment, cooling, networking, land, permits, and 24/7 ops, where power cost and reliability dominate. Soluna has used Bitcoin mining as a flexible, commodity-like revenue stream, and it also targets AI and HPC, where contracted, reliable service can command steadier, high-value demand. This is where the fundamental mystery starts. The model is capital-intensive, and cash flows lag build-out. In a clean trajectory, companies finance in stages, build and energize, ramp utilization, stabilize contracted revenue, and eventually rely less on issuing stock so per-share value can grow. A major anchor is September 16, 2025, when Soluna announced about 100 million of credit financing from Generate Capital tied to Project Dorothy and Project Katie. For a company around 110 million market cap, that scale can materially change what gets built, and debt can be less dilutive than equity if it is serviceable. But debt is also a timer. It assumes repayment capacity. If losses persist, the bridge period becomes the danger zone where small caps often raise equity or use equity-linked instruments that feel non-dilutive now but dilute later, which is why the share trend matters. A roughly 3x rise in shares outstanding in about a year is atypical. It usually points to aggressive issuance, conversions, or warrant exercises. And the common implication is that per-share upside can be capped even if operations improve. That concern turned forward-looking on November 7, 2025, when shareholders approved raising authorized common shares from about 75 million to about 375 million, effective immediately. Authorized shares are not outstanding shares, but they expand the company's capacity to issue stock later. Normally, authorized share increases are incremental and tied to specific needs. A roughly 5x jump, especially after heavy dilution, forces uncertainty pricing. It could be flexibility, or it could be runway for more dilution. The compliance timeline adds pressure. On October 3rd, 2025, an 8K stated Soluna regained Nasdaq minimum bid compliance after meeting the 1.0 standard as of October 2nd, 2025. Regaining compliance is positive, but having the issue at all signals fragility that can raise capital costs and tilt funding toward more dilutive paths. Put together, September 16th, 2025 credit financing, October 3rd, 2025 compliance regain, November 7, 2025 authorized shares expanded, and December 2nd, 2025 close around 160, well below the 510 high. Both a bullish execution path and a bearish capital loop path remain plausible. And that tension is the core mystery. Bull case, debt funds build out, compliance stabilizes, and authorized share headroom supports legitimate conversions or partnerships, with re-rating possible if energized capacity and monetizable utilization show up, especially in higher value AI HPC demand. Bear case, the business stays financing dependent, the ramp gap persists, past dilution repeats, and expanded authorization becomes issuance runway, limiting per share upside even if the company grows. Technicals reflect caution. RSI 14 around 40 suggests weak momentum and selling pressure without full capitulation. Make D in negative territory points to a bearish trend state aligning with a market waiting for proof. The practical takeaway is scenario-based risk management. Short term, treat SLNH as a volatility trade. With price around 160 and the 1.0 compliance memory, watch about 1.40 to 160 for stabilization and a possible rebound toward about 2 in a row, while respecting that a break below about 130 can accelerate repricing. Medium term, trade confirmation, not hope. Bulls need evidence of energized capacity, utilization ramps, and credible AI HPC revenue pathways. If that arrives and the dilution fear recedes, a re-rating band around about 250 to 320 is plausible. If equity-linked financings recur after authorization expansion, overhang risk rises. Long-term, size it like an option unless conviction is exceptional. If Soluna becomes a durable, renewable-powered compute operator with self-funding economics, revisiting about 5.10 is conceivable. If financing dependence persists, about 0.40 remains a realistic risk zone. Before we close, if you are tracking undervalued or misunderstood stories like this, the ValueStir channel wants your tips. Comment the tickers you want investigated, public, private, or planning to go public across stocks and coins, and tell us what feels off and what evidence you want checked. And to returning listeners who watch through, subscribe, hit like, comment, and share these episodes, thank you. We will repay that trust with sharper research and better content every time. The conclusion is uncomfortable. The mission addresses a real constraint, but the equity is dominated by the collision of operational ambition and capital structure. The about 100 million facility on September 16, 2025 signals financing capacity. The October 3, 2025 compliance regains signals prior fragility. The November 7, 2025 authorization expansion enlarges issuance capacity. The roughly 3x share growth shows dilution impact, and the about 1.60 close on December 2nd. 2025 reflects ongoing skepticism. The mystery is simple. Is the next chapter energized capacity and contracted compute revenue, or more shares? This was ValueStir.